Psychological support and resistance levels in Forex trading are specific price levels that hold significance due to the impact of human psychology on traders' decisions. These levels are not determined by traditional technical analysis methods but are derived from traders' collective perception of certain price points as important and influential. Psychological support levels are round numbers or price levels that end in zeros. Example, 1.1000, 1.2000, 100.00, etc. These levels often serve as barriers where traders expect buying interest to increase, partly because these numbers are easier to remember and relate to. When the price approaches a psychological support level, traders may become more inclined to buy, anticipating a bounce or reversal. Psychological resistance levels are also round numbers but represent price levels where traders anticipate selling pressure to intensify. Example, 1.1500, 1.3000, 110.00, etc. These levels are perceived as barriers where traders might believe that the price has become overvalued and could reverse. When the price nears a psychological resistance level, traders might consider selling or taking profits, potentially leading to price reversals.
Are you a trader? Aren't you profitable yet? Do you need a free consultation? Go to the Forex Academy website. Select Consultant Appointment in the main menu and finally set up an appointment to talk with our experts.
We express our gratitude for your attention. Forex Academy ensures weekly Forex and crypto analysis and forecast to keep you updated. Optimize your trading decisions with our daily Forex and crypto signals. Support us by liking, commenting, and subscribing to receive our profitable signals and insightful analysis.